Welcome to Value Trading Pro. Hope you all had a great trading day today. The Nifty managed to close in the green, but the real question on everyone's mind is what's next for tomorrow? In this video, we are going to cut through the noise and I am going to give you the absolute key support and resistance levels you need to have on your chart. We'll break down the bull case, the bear case, and the simple actionable trade plan. So stick around because this is your roadmap for the morning session. If you find this valuable, please do smash that like button and subscribe for your daily trading edge. So today's market recap and support setup. First, let's quickly look at what happened. The Nifty 50 closed at 25,170.30, up by about 125 points. That's a positive close, no doubt, but look at this current chart. The price is sitting The price is sitting right at a very interesting junction. You can see we have a sell level marked just above us at 25,181 and a buy level at the same price. This tells us that the market is essentially at a decision point. The battle between the bulls and the bears is set to happen right here. So based on this structure, let's get into the most important part, that is the key levels for tomorrow. The key resistance levels like the sell zones. Let's start with the resistance levels, the ceilings where the market might run out of breath. The number one most critical level to watch tomorrow is the zone between 25,180 and 25,200. Why is this so important? First, it's a psychological round number. Second, and more important, our data shows a clear sell trigger at 25,181. If the market opens and moves up but gets rejected at this zone, we could see a pullback. This is your first sign to be cautious if you are long. Now, if the bulls are exceptionally strong, and if they manage to push and sustain about 25,200, then the next target comes in at 25,300. A break above 25,200 could trigger further short covering and buying. In that case, 25,300 becomes the next logical profit taking zone. Beyond that, we have higher resistance at 25,400 and 25,500. But for the morning session, focus on that 25,200 break first. And coming to key support levels, now let's flip it and talk about the support levels. The safety nets are the buy on dip zones. The most immediate and crucial support for tomorrow is at 25,100. If the market opens with a negative bias and starts drifting down, 25,100 is the line in the sand. If this level holds and we see some buying interest or a bullish candle pattern here, it could be a good opportunity to enter a long trade for a bounce back towards 25,180. However, if the selling pressure is strong and if we get a confirmed break below 25,100, then the market is likely heading down to test the big one, which is 25,000. The 25,000 is just not a number, it's a major psychological support. A dip to this level would likely attract strong buying from larger institutions. So if we fall there, watch for a potential reversal. If it breaks, then we could be looking at a deeper correction between towards 24,900 or even 24,800. So let's put it all together into a simple trade plan. For the bulls, you want to see the price stay about 25,100 and then break about 25,200. Your first target would be 25,300. Keep a stop loss below 25,000 JT. For the bears, you want to see the price get rejected at 25,180 to 25,200, or more importantly, break below 25,100. Your first target would be 25,000. A stop loss would be about 25,220. What if there is a consolidation? The market might just get stuck between 25,100 and 25,200. In that case, avoid chasing trades and wait for a clear breakout or breakdown. There you have it, a clear level-based plan for tomorrow's Nifty session. Remember, the key is to be patient and wait for the price to come to your levels. Don't force trades. If you enjoyed this clear breakdown and it helped you, please show your support by liking this video and subscribing to the channel. It really helps me out. This is purely educational content and not financial advice. Always do your own research and manage your risk. Let me know in the comments below which way are you leaning for tomorrow, bullish or bearish. Thanks for watching.